All right, hello everybody. We are late because of Tanner Manson, but that is okay because this is episode number 2
Not true.
of Robinhood Weekly. What's up, guys? How you doing?
I'm doing awesome, man. I'm
Doing better
awesome.
now that it's Hood Weekly time and I got my hood cap on.
Yeah, there you go, eh?
Actually, it's kind of weird backwards. I'll go back.
I'm excited. We got a lot to talk about. Go ahead, Tanner.
No, I was just going to say, this is the freaking quarter for crypto. I'm getting so excited to not only talk about these November numbers, but I also want to bring some December numbers to you guys after that. But so far, things are looking juicy.
Dude,
but
yes.
I'll let you control where you want to go, and yeah, let's cover this.
Yeah, I think let's get started with the November numbers. We got a lot to talk about, guys, so we'll get into everything. I also have some December projections, so we can take a look at that in a bit. But it was a hell of a month for December, so let's get started, or for November, so let's get started with that. November metrics out for Robinhood. I mean, the term I'm using is jaw-dropping because I don't know a better term other than that. 420,000 people added in the month of November. A good month for them is about 75,000. This is a lot more than that. Assets under custody went from 160 to 194. I believe they have not included any of the assets on the trade PMR acquisition because that hasn't closed yet. So this seems like crypto went up a lot, equities went up a lot, and then deposits went up. So that's a $30 billion increase, which is not bad. Net deposits, $5.6 billion. This is the one I'm the most excited about, and that's because Robinhood really didn't run any promotions in November. One of the first months without any major promotions, and it was their best month ever. Cash sweep at $26.5 billion. Equity volumes, $147 billion. Best month in over 3 years. Crypto, $35 billion. That's a lot. In November. That's double everything that we had in Q3 in 1 month. Margin book up another 600 million at 6.8 billion. And then option contracts, 155 million, another good month for options. A lot to dive into, but let's get into your raw thoughts. Roy, what did you think of these numbers?
Yeah, mind-blowing is correct. The crypto in particular. I mean, okay, let me just throw this up for context. I'll just do the window here because I need 2 different tabs. Okay. So this is Q3's result, just the transaction. And we can see as far as what they did, obviously Q1 was their best in crypto, $126 million. It shrank down to 61 million. Let's look at those monthly numbers again. So crypto notional volumes, we can see 23.6 was in March. So January, February, March, these 3 quarters right there. Guess what? Those 3 where they had the mind-blowing crypto results basically equal November.
Yeah.
And I know that Tanner wants to go this direction here in a little bit. December is probably not going to be half bad. I'm just saying. All-time high Bitcoin, altcoins roaring. They have, I think they've listed now 5 coins since the election day. Things are looking good in the hood. Very good.
Yeah, Tanner, your thoughts?
I like how we saw the November numbers and they were like $30 billion of crypto volume. We're like, what? Like, this is unbelievable. And then they actually posted the numbers. They're like, well, it's 35.2 billion. And you're like, did you really just round $5 billion? That was your last, that was October numbers. You rounded October. So it was an insane quarter. Q1 of 2024 was the best quarter that we've seen in crypto notional volume from in multiple years. And November was almost higher. That was 36 billion. This was 35.2 billion in 1 month. So it'll be one of the greatest quarters in a long time. There was a quarter long time ago, Q2 of 2021, which was an unbelievable blowout quarter for crypto for Robinhood. But the take rate was 1/4 what it is today. So they are actually charging 4 times more, actually more than 4 times on every crypto transaction than they were back then. And that sounds expensive. It sounds like they're ripping off retail, but yet whenever you compare it to Coinbase, they're 1/4 of their pricing. So there's so much left to go before they actually, sort of meet parity there. And obviously they're taking market share in crypto, and crypto in general is booming. Then not only looking like whenever you're looking at these brokerages, you need to pay attention to the total volume traded. That's what matters. But the overall crypto pricing changes the net gains. It changes how much people actually own of these stocks. So whenever they go to sell it, it's a larger percent, or it's a larger dollar amount that's actually traded. So not only does Bitcoin raise up, potentially increase the amount of volume because people get excited, but on a per dollar basis, it gets better for Robinhood, let alone market share gains, let alone pricing power. It's like this is going to Q4 is going to be the quarter for crypto, and then who knows what's going to happen in 2025.
Yeah, I am pretty damn excited for this. I mean, if you run before, I mean, even I talk about my excitement. Let's just look at the earnings expectations. Before these numbers came out, Wall Street was expecting $654 million of Q4 revenues by Robinhood. Now, if we look at Seeking Alpha, they're expecting $820 million. And for good reason. I mean, I wish they didn't raise the expectations because then, we would have a massive beat, but, we're probably not going to have a massive beat. I still think, well, we'll talk into December what that turns out to be, but Robin is going to be flirting with $1 billion of revenue in Q4. That's
and
exciting.
This is real revenue. This isn't like, oh, look, we traded this amount of Bitcoin. And so, it counts as revenue. It's like none of that nonsense.
Yeah. Yeah. And this is, remember, guys, not every it's not that they're just trying to get more members in and they're beholden to what the markets are actually doing, but the amount of new members that are coming onto the platform is increasing. So if we get another, December comes in with an additional, even 300,000, 200,000 more members, it's going to be disgusting. Like the amount of member growth will be very exciting. The amount that they trade is seemingly exciting. The percentage of wallet, so not only on a per member basis, but how much revenue that they're taking per each member is going up. This is what makes good growth companies, is S curves that are growing on top of S curves. And Robinhood is the signal of that. And yes, it's a little they'll fight on the idea that they're a cyclical business, but you're really it's a brokerage, so they're going to face some cyclicality, but take advantage of it, strike the iron while it's hot, and they are doing that.
So every number was good in November. Like crypto was the best. It's ridiculous. Margin, very, very good. Options, AUK. This was the second most impressive to me right here. Funded customers, because look at this. We can see the pattern: 23.9, 24, 24.1, 24.2. Yeah, need a little extra time. 24.2, 3, 4, 24.8. This is the largest single increase, not by percent, because that would actually have it beat. It's about the same, actually. Going back for years. And like Amit said, Amit, you said, I think that there was no incentives at all in November. There is sometimes when there's an incentive in October and you didn't get your account transferred in time, they'll honor that. But
right.
This is basically just natively people joining Robinhood. Why do you guys think that there was this tremendous leap in November?
I don't think that it necessarily has to do with Robinhood's marketing in general, but I think just a lot of retail activity because things are so green. And Robinhood, as much as people want to say that the buy button situation was this, ending, like career ending decision for them, it wasn't. This is the place where retail goes to buy and sell, especially for their first time. So now that there's these companies that are making massive gains, Tesla's very hot right now. I don't want to say Palantir, but I said it. Crypto, all of these things, this gets retail very excited. I mean, honestly, guys, I don't want to say this on Amit's channel, but I will. I think that selling Palantir and putting it into Robinhood is probably
Whoa there, buddy. Whoa there, buddy.
Amit,
relax, okay?
Are you buying? When's the last time you made a market purchase of Palantir? No.
I'm not buying Palantir. Everyone knows that. I bought Hood today. Everyone knows.
You bought Hood today. That's what I was going to say.
Yeah,
but I wouldn't sell my Palantir just to.
I don't have any problem buying Robinhood here. It keeps hitting 52-week highs. This is a company I wouldn't. It's not wildly undervalued like it was last year, but that's okay. This is a company that's, I think, generational. Honestly, I think that's Tesla, Palantir, and this company right here, Robinhood, are like the three that I own that I have the highest conviction in, like long term over the next decade. You know, I'm very bullish on PayPal, SoFi, Nubank's going to be great. Enphase, I think, is pretty good. Hims, I think, is phenomenal. I'm not quite sure it's generational, but man, like this is just one of a kind company, and I want to be in it, and I need to add to it.
Yeah, and look, the reasoning behind this Tesla, Palantir, Robinhood thing is because, well, Palantir has enterprise AI software and all these other verticals they're getting into, and like really making LLMs useful. Tesla has robotics, FSD, energy, all that stuff. Robinhood has two words that are on their side, which kind of goes back against the argument that people say for cyclicality, which, yes, it is obviously cyclical. I don't know if crypto revenues are going to be this high next quarter, but they have something called wealth transfer. And that is why I bought 25 more shares today at 42.54. I mean, when we really look at the market cap right now, the market cap on Robinhood is 38 billion. They have 5 billion in cash, and that's probably increasing due to more free cash flow this quarter. So you got 5 billion in cash. You're going to be growing well over 40% next quarter if our numbers are correct. They're buying back their own shares. I don't know what the fair value is, but as we'll talk about in December, if December is on par with November, even if it's slightly down, and you believe in this wealth transfer thesis, along with you believing in all the verticals they talked about on Investor Day, it's not expensive. Like, it's really not expensive. Will there be pullback? Sure. And, you know, if Bitcoin tanks tomorrow, Robinhood definitely will feel a little bit of that pain as well. But if you believe in the Bitcoin thesis, you believe in the wealth transfer thesis, you believe in their revenue prospects and growth going into next year, you believe in their acquisition strategy, you believe in Bitstamp and how that's going to diversify them globally, it's a company that's looking closer like a triple-digit stock in the next couple of years.
Can I give you a compliment, Amit?
Yeah, go ahead.
I think that your ability, I don't know your portfolio size or whatever, but to even continue to DCA into companies that have made multiples higher than when you originally bought them is such a strength. It's sometimes very hard for people to buy companies, even if they've moved 20% higher, because they're not getting as good of a deal as what they've done before. To continue to see you buy into companies that you have very long-term belief in, know that it's still undervalued here at 40, even though you've potentially bought at 8, is an incredible skill. That is some real, like, you need a real stomach to do that. And it's good to watch and a good role model, honestly.
Well, I was talking to this with Roy when he came over, but it's a skill that I had to go through some pain to learn, because I should have been doing that with Palantir. At $30, $35, you know, I felt like valuation was getting up there. And although Robinhood's different from a valuation perspective, still, if you run up this much, conventional wisdom says you don't buy. But buying to strength isn't the worst thing if you care about ownership versus just like getting a good deal, right? So yeah, it's a mistake I made with Palantir. I'm sure a lot of people made that mistake with Tesla. They probably had positions at 150 that they bought in April, should have bought more at 250, but they said no because they wanted 150. And so it's one of those things where if you actually understand and believe in a company, then it's easier to buy. And that's what it looks like it's happening with Robinhood.
Yeah, and I've started some new positions, but like most of my buys have been companies that have already run up a bunch that I just think are going to continue to go, including the one share, Amit, of Tesla. When I was there in person, I'm like, yeah, I'll buy one at like 370 or whatever. It's like, it's not in the 200s. It's not in the hundreds like I was buying it, but I need to normalize buying in the 300 range. Just get over that psychological hump. Just one share, no big deal. Now it's in the freaking 400s. And that's what can happen with quality companies over time. Like, you don't have to, a mistake that retail often makes is, okay, great, I made like a 3x here. What's the next 3x? Instead of, you know, and you can do that to a certain extent with a small amount of your portfolio. That's completely fine. If you're a trader, I mean, go nuts. But largely, like, find and identify quality companies that you want to hold a long time and just let them compound. Tanner, you own a good bit of NVIDIA. You know, that's a quality company by every definition. I'm not going to ask like what percent or what's your average, but how long have you held it for?
Since December of 2018, and I've done the opposite of buy it on the way up. I've sold it on the way up, which was a big mistake. But yeah, it's still the largest position in my portfolio because of how it's moved. And it would be a much larger position if I never sold a thing. But yeah. I wanted to say though, with buying and holding companies, if you buy and hold a company like, I don't know, Palantir, in bear markets, you're facing a change of sentiment, right? Maybe some revaluation in the way people look at companies. But with Robinhood, you're kind of getting hit with a double whammy because not only is their sentiment change, but a bear market causes their fundamental company to change, right? So that's one of the greatest things about Robinhood, and one of its greatest weaknesses is like you are tied to markets because it's a brokerage, right?
Mm-hmm.
One of the greatest things that Robinhood has that beats out on the likes of Coinbase or all of these other brokerages, in my opinion, is the fact that they do crypto, they do stocks, they're getting into options, futures, event contracts, etc. And so you do get some diversification. We're going to see more of that later on, especially with advisory services. But it is like, it's almost a leveraged bet on a bull market.
Yeah, and someone in the chat says, well, you know, what happens if Hood goes down in a bear market? Hood will go down in a bear market. It doesn't take rocket science to understand that their trading volumes will go down, deposits will go down, all that stuff. So I think there's two answers to this. Number one, if Hood went back to $20 in a bear market, meaning the whole market crashed, I would want to buy that stock because eventually that bear market will be over, just like we saw in 2022. And just like a lot of us, you know, Roy and I, $8, $9, right? Like the bear market ended of 2023, 2022, and we started to see more momentum. So I think that would be a dip to buy, but you would have to be patient with it. Number two is they're trying to create a lot of parts of the business that are not cyclical, like their gold subscription and things they're doing in regards to the media advertising part of the business, a small portion of revenue, but that's probably never going to go away. There's all these other things they're trying to do that are less cyclical, but the far majority of the business is cyclical. And I think we have to understand that. So the final answer to this is, do you think 2025 is going to be a bear market? And I think the far majority of people agree 2025 might not be like 30% S&P 2024 type of returns, but it's not going to be bearish, like down 20%. And if that's not the case, then if Robinhood can keep executing on the verticals where they're trying to remain more diverse on, while slightly still growing the core part of the business, maybe not at 40, 50%, but maybe at 20%, then that means Hood should still do well in 2025, even if it doesn't 5X like it did before.
Yeah, I think that's fair to say. Sorry, go ahead, Roy.
And I'd like to add more. You know, Robinhood, I profited immensely off of options, and I've pivoted some of that into the stock itself. But it's, you know, I'd like it to at least be a 10% allocation, and it's not there yet. I think it's my third largest at this point, maybe fourth. Tesla shot up a lot, but I see this is a company where I don't really want to sell shares unless it becomes wildly, wildly expensive.
Yeah.
You know, if Robinhood shoots up, nothing has really changed. But let's say the quarter four numbers come out in January and it shoots up to 120. I will sell a lot of Robinhood because it's a great company. It shouldn't be at 120 unless crazy things are happening in the market. Even then, I'd still take profits. But on those pullbacks that'll happen over, you know, months, if not years, in a bear market scenario, like that'll absolutely happen. I see that as more of an opportunity to add and grow that rather than have to sell Robinhood on the way up and maybe even buy some leaps. Cyclical doesn't mean uninvestable. Some people want to avoid cyclicals, but like Tesla is a cyclical stock. It just is.
What do you mean? Why is it cyclical?
Tesla? The EV market, auto market is very cyclical. It's tied to rates. So
that's fair. Yeah. Right.
Energy sector too.
I've got a couple numbers that I can show you guys if you're interested in getting a little nerdy with it.
These are December numbers?
No, still November.
Okay. Yeah, let's go with it.
I'll just show you what I'm seeing for revenue, and keep in mind that this is still very like fragmented. We don't have all the information yet, but if we take Robinhood's numbers on their trading volume and just take October and November, okay, we'll add those two together. This is how far we are in Q4. So this is not assuming anything for December. This is just taking what we already know.
Yep.
And the only assumption here is that the take rates for equities, for commission per contract, and for crypto take rates stay consistent.
Right.
Now, equities look like it's been slowing over the last little bit, but crypto looks like it's been accelerating. So you might even be more bullish on crypto and a little bit more bearish on equities, but it's not going to matter because crypto is going to make up for such a larger take here. Don't mind this 700. It's going to be much more than that. Half of these tiles are not even filled in. But On the actual revenue expectations, transactional based revenue for options, for cryptocurrencies, and for equities, I have it projected out. This is including December, but December is just the average between October and November.
That's fair. That's a fair way to do it. That's fair.
Okay. Cryptocurrency might actually be lower because it looks like we'll talk about December, but it's looking like December is going to be potentially even stronger than November, let alone be anywhere near October.
Yeah.
So
it's insane.
this could be wildly off. But essentially what we're seeing is options contracts still coming in very strong versus what we've seen in previous quarters. $216 million still blows away every other quarter. Cryptocurrencies, 257 million. Like, come on. What are we looking at here? This is insane.
That is wild.
Insane.
That's
and
so
then
wild.
Equities, 53 million, still very strong. A smaller percentage, but still record breaking over the last couple of years.
Mm-hmm.
So we're looking at transactional based revenue, and this is assuming 20 million and other just staying flat. We're not even considering event contracts, which might bring in another 5 million. Like an insane 547 million in transactional based revenue, which I think might be low, is what we're going to see for this quarter. Look at previous. Like we're not even like we just skipped 400.
Oh,
Dude, that's
ridiculous.
fucking wild. That's so wild, bro.
You know what that looks like to me? That looks like the golden confluence right there. That's it.
Yeah. So
It's not over.
It's insane, guys. Look at cryptocurrency year over year, and I honestly think this will be low. Like I think there's a real chance for it to be above 300 million if December keeps up. Okay. If take rate, if they've slightly increased it from like 0.42 to like 0.45, this is going to blow away the numbers. It's up 500% year over year.
Dude, I should have sold my left nut to buy more at $8, dude. I don't know why I didn't think of doing that. I really should have done that. Like, do I need the left nut? Do I need it? Like,
Yeah.
like you only need one of them, right? I don't know. But okay, so can you go to the net interest revenues? Did you calculate those?
No, because there's so many assumptions that I can't know. So I did a couple, like we knew margin, but
so I did the margin numbers. I got 97 million for the quarter on margin. Is that what you have? You have 100.
I got 102.
So we're the same.
So yeah, I took their take rate, just kept it consistent, I think, and then the amount that they're trading, and then averaged it out for December.
So what's your total revenue so far? Even though
half these are not filled in. So like securities lending, credit cards, interest on investments, like these are all going to change it. But and I don't even have contra revenue in here, but it's at 600 right now. It'll probably be, 700. It'll probably be above 800 once you add in everything else. Because not only that, we have to look to assets under management or under custody. That is what's really going to impact their net interest revenue, right?
Right.
And so all these are going to be higher than what we saw last quarter just because of the amount of increases that we saw in November. Unless it draws back significantly in December, we are going to see massive beats here.
Yeah, and the thing is, I mean, I'm curious what you guys are looking at in December. December looks like users are coming, top 10 in the App Store, people are trading. Like, do you think December could be worse than November?
Worse?
No.
Yeah.
Well,
not so far. No, the market's doing really well. People are expecting Santa rally. Crypto is roaring. All-time high Bitcoin. I mean, like margin book. Like we didn't even talk about margin book. It's you mentioned it, but yeah, that's just absolutely cooking. Their strategy, like, do you remember like two or 3 quarters ago, Amit, when I think it's 3 quarters ago when they raised the margin rate and we were like,
yeah, we were confused.
It'll probably pay off.
They lowered the margin rate.
Yeah. Oh, yeah, exactly. Yeah, they lowered it, and we were like, yeah, it'll eventually pay off. Probably, it like really quickly paid off.
Oh, sorry, I'm not trying to share my screen. I was just looking.
Okay. No, I it's hard for me to see a scenario unless contra revenue is just ridiculously high, or there's some other unforeseen expense that we don't see and we don't know, which I wouldn't be too happy with. But I think that they're pretty clear in Q3 earnings what to expect. So,
and Tanner, I'm assuming you feel the same. You think December is coming out to be a pretty good month as well.
It's coming out to be a very good month. I don't know if it'll be stronger than November, but I don't foresee it being the average of October. Like, I think it'll be above my targets. So I can't guarantee that I see over 35 billion in crypto volume. What's so funny is like how I look at Robinhood, right? Like up until Q4, it was like options contracts, options contracts. Equities are just a cherry on top. Now I'm just like crypto. This is the quarter for crypto. So that's the only number I'm generally caring about. And will December beat 35 billion? There's a potential, and we can get into December numbers, but it'll still be very hard. Like a full month of really good crypto activity. So far, it's looking like it's holding that up, but that can change over the next few weeks.
Before we go into December, don't sleep on options. I mean, I know that you're not, but
No,
index options were released, and those have a higher premium than regular options. And so, you know, I don't know that
I don't know about
people
that.
I don't know that people, I don't know we'll see, you know, a significant amount in just December, but there will be some. Options will do good anyway. But over next year, I think that can grow to a very, really accelerate the growth there in the options line of revenue. So
historically, index options have not been higher revenue than regular options. So I don't know if they will be. Obviously, they're charging a separate fee to close that gap, but I still don't know if it does close it. Like, I don't know if it's as clear cut as that, but yeah.
what do you mean?
Well, I've read some reports on Robinhood, and index options, it was one of the bear cases of it being cannibalistic and lower take rates for their business. And that's usually the case at other brokerages, that index options are not as good for them as just, you know, options contracts.
Oh, so despite the higher fees, that they have lower margins on that potentially, depending on what they settled with CBOE. Okay.
Yeah.
Didn't know that. Yeah. I guess we'll see.
Yeah, I just think the futures, which haven't been rolled out yet, index options, and then maybe another event contracts feature they bring out maybe for the Super Bowl, who knows? All of those are going to be increasing transaction revenue. So, and that's another way to hedge against crypto exposure if crypto goes down in Q1 of 2025. If futures and index options maybe don't make up the bulk of the 30 billion we saw in November, but they still add, like Robinhood, the challenge is going to be they're going to have tough comps next year, because I think they did 580 million or something in Q1. They've got to beat that by 20%, 25%, right? If you're going to be a growth name, you got to keep growing. That's not going to be easy. And if the market is kind of in 2025, or at least in the first quarter, how can you show that you can beat those numbers, especially if rates go down because net interest income goes down? So they've got a lot of stuff they have to figure out. But the fact that they're able to capitalize on this type of momentum, which is what we're seeing right now, I think it's getting very, very exciting going to December.
Yeah. Yeah. Even like let's not sleep on credit cards. Everyone looks at the credit card line, but you have to remember that, at least this is the way that I'm understanding it, is that that's the interest revenue for credit cards, not the transactional revenue for credit cards.
Correct.
So the transactional part of the credit cards, the interchange, falls under the other category of transactional revenue. If that makes sense. Maybe I'm making things more confusing, but
So let's do the credit card before we get into December numbers, because I want to do an actual segment on credit cards, because I think we need to talk about it.
Go ahead and brag, you guys. I'll sit back.
Let
me ask Roy. How's your experience with the credit card been, Roy?
Dude, it's awesome. I really feel like it. You have not seen the Lord of the Rings, so you probably have no idea what the One Ring is and My Precious, but that's how I feel towards that Robinhood Gold card. Even though it's not the solid gold, it's getting those rewards. 3% is great. Like being able to instantly, like on the app, I swipe the card, I tap the card, whatever. Within 15 seconds, the app says, "Hey, you did this transaction, you got these points." Instant redemption. You don't have to wait a day or two. Yeah, it looks really nice. I've showed that to a couple of different people. Actually, even one of my fellow workers, he's looking for a new credit card. I'm like, "What do you think about this puppy?" He's like, "Ooh, is this Robinhood?" And I told him about it. I showed him the rewards. He's like, "I got to sign up for those." Like, probably need to find a different credit card because they're going to be on the wait list for a while. 2 million people on the wait list. And at the end of the credit card segment, I found some really weird fun redemption stuff. I made a post on this separately, but yeah, the experience is great. Let me just real quick talk about just a couple of things. So one is virtual cards. It's the easiest thing in the world to create. I really love that. If I'm doing a free trial, like the most annoying thing is trying to cancel that, because some just, you have to go through all these different hoops to cancel. So you take out, you go to your app, you do a virtual card. It takes, like just a couple of clicks to do it. You can hit the copy and paste button, and then you paste that information in whatever free trial thing you're doing, and it's going to automatically cancel within 24 hours or after one transaction, or you can just set it up and you cancel when you want. It's fantastic. Adding for family members, super easy, super slick. It takes like 2 or 3 clicks, almost nothing. You have to put in their name. I mean, it's not much. And then they even have an option for one of my sons. He wants to build credit. And I'm like, hey, I can get him a card. He can build credit. A little bit more information I need to fill it out there. But and then I had to put up his spending limit. But great experience, both on the app, both for the card. I love it. What about you?
It's one of the very exciting things about the credit card. It's like, I'm a big investor in Sofi as well, and they just recently put out a bunch of new credit cards, a complete new credit card. They hired a ton of people. Like, it's an entire new segment now. But still, whenever they release that, there's no, virtual cards. There's none of this easy sharing. Like, I don't know. If you want to be the best in breed, you have to come at it the way that Robinhood came at it. And they continue to do this in every product line that they get in, which is super exciting, not just for what's here, but for what's next that we can't even see yet.
Yeah. So I want to talk about credit cards because they talked about it at Investor Day, and I want to play that clip for people to get an understanding of the answer to the question about how they're managing credit cards. But B, a lot of people are complaining they haven't got their credit card yet. And I think if you are an investor in Robinhood, as much as it sucks you didn't get your card, you want them to take their time. There is no world in which they should issue 2 million cards tomorrow that are on the wait list, because the underwriting process for that would probably be horrible. And quite frankly, if you're upset about it, you can't do anything because no one else is giving you 3% cash back across the board. And If you want to go get some other card that's 3% here on groceries, but not anything else, go ahead, be my guest. But when the Hood card finally comes out for you, you're probably going to switch. There is no opportunity cost to making you wait. There is only downside to pushing it early. And I think a lot of people are upset about this. And if you're not investors, it doesn't matter. The general public can be upset. If you're an investor, you've got to be loving the fact that they're taking their time on rolling this out.
The biggest complaint about this product, the number one complaint, I don't even know if there's a number 2, is just the fact that people don't have their hands on it also.
Yes.
That is a great problem to have. So one of the things that Vlad Tenev said to me whenever we did the first conversation, I was asking him about the unit economics of the card, and I was like, this doesn't look right. Like, you're not making 3% per transaction, but you're giving away 3%. And he said, all these credit card businesses, the biggest expense that they have, the biggest, is sales and marketing, customer acquisition cost. So Robinhood's just taken that out of the equation. And now they can focus on just making unit economics with a essentially unlimited line of customers that are lining up for this product, because they said 200,000 new signups monthly? Was that the statistic from the Robinhood Investor Day?
Yeah, every month. So that's 2.4 million people a year that are signing up, if that
right now, holds. And that will slow.
Right.
But if you're not signing up 200,000 people a month, which they're not, that pipeline is getting bigger and bigger. Your bookings are getting longer. And so, yeah, it's a very exciting time, at least for the foreseeable future.
And I can speak from somebody too that, is frustrated on one hand, but also excited as an investor. We already talked about the investor part. I agree with you completely on the investor. It's good that they're taking time. And based on people that got their card already, I asked, a lot of questions if, they were comfortable sharing, and people shared their credit score range, their income, their assets on Robinhood, all sorts, and age as well. And those that shared, it gave me the idea that what they were doing is casting a very wide net so that they get a whole lot of different types of individuals just to see how they perform overall, and then that can inform their lending going out, further. And anyway, as a individual though, I was like, man, it's very disappointing that literally from the first minute I was signed up, didn't get the card at all. And because we went to Investor Day, everybody that was there, they're like, hey, if you're on the wait list, you get your card. So great. Otherwise, I'd probably be waiting another 6 months, and it would be frustrating because it's a great product. I wanted to have it. It's we ended up getting a different credit card, an airline card, which is a very good card. There's lots of other very good cards there. But the thing is, the instant, if you're on this wait list and you're frustrated and you're like, man, this is ridiculous. Robinhood better get their act together, this, that, the other. The moment you get the card in your hand, you're like, okay, amazing. Robinhood's the best.
Yeah.
You don't care about that wait. It's just like if there was the next Xbox or whatever, or PlayStation that was out, and you're on the wait list and you're having to wait for it and you're frustrated, as soon as it comes, you forgot all about that. You're just enamored with that product.
It's not just a credit card, right? You're keeping more money there because you're like, well, I'm going to have to pay my credit card bill, so I'll just keep a higher percentage here. And they actually do offer such a high cash back. So why don't I just, store some money in the checking account and wait for my credit card bill to be due, and then Robinhood's winning even more interest income. So it's a double whammy for them.
Yeah. And so they asked about the credit card stuff in depth at the Investor Day. Let me know if you guys can't hear this. I hope it'll be good on volume, but here's what Ravi, the head of credit, had to say to the question.
Who holds the mic wields all the power.
It is quiet, but
FT partners.
I'm going to play it for like 20 seconds. Let me know, guys, if it's just unhearable at all. If not, then we'll listen.
I'll dovetail off the waitlist joke a moment ago and dig in maybe a little bit on the credit card.
Good. Yes. Deepak's been itching to speak here.
So I would imagine there's a lot of sort of test and learn with the initial cohort. You need to see it seasoned. You need to see the behavior. But as a result, maybe there's an opportunity for sort of nonlinear growth starting in 25. I know you've alluded to bigger groups coming off that wait list. Can you talk about that? And then maybe to keep it long term, how the card sort of dovetails into a broader sort of neo-banking offering, over that sort of decade viewpoint would be great to hear. Thanks.
Cool. I think first of all, on the credit card, we're honored by the interest. We're working really, really hard to give it to as many people as possible, including you. I think just in all seriousness, I think we have given the card to over 100,000 card holders. The reception has been incredible. We are 5-star app rating across like iOS and Android. Just as of last week, we have crossed over $3 billion of annualized spend. And the retention is immensely, immensely strong. I think I'm going to hand off to Ravi for telling you more about like the cohorts and the credit quality and things of that. And then I'm going to answer your new banking point in the end. Ravi, go for it.
Hey, thanks, Deepak. And thanks for the question. Given all my experience with the credit card industry, we have come to this realization that there's only one playbook that really works if you want to build a large, profitable, and resilient card business in the long run. And that playbook requires you to be patient in the short run and then ambitious in the long run. And the reason you...
So that's the first thing, right? There's the head of credit saying, hey, you got to give up some short-term growth if you want to get this right over the long term.
Want to be patient is obviously you want to validate the economics, you want to understand the cohort performance, but you are also taking time to gather the data, do a bunch of experimentation, and fine-tune and train your models so that they can be much more powerful down the road, and then you can take that opportunity. So that's the reason why we are being a bit patient and just learning from some of the other successful models in this space. I think the few, like having seen the data I have seen thus far, and again, it's too early to get to a place where we can start that non-linear phase of the growth just yet, but again, 25 and 26, definitely. But there are a few signs which make us cautiously optimistic about the long-term prospects of the business. One, we are seeing that the gold card is attracting low-risk customers, and the level of delinquencies and defaults we are seeing on the gold card portfolio is significantly lower than the legacy X1 portfolio we had acquired. So that's a positive sign that we can build this business in a responsible and safe way. into a much bigger business. And the second thing, which honestly has been a pleasant surprise to me, I know that Vlad and Deepak always had this thesis that Gold Card is going to create this platform, an ecosystem flywheel effect. And I was somewhat skeptical of that. But as the data has come in, I am seeing that Robinhood customers engage slightly differently with the Robinhood platform, and they're bringing in more assets. There's more activity, there are retention benefits, and all that leads to kind of competitive advantages, which will be difficult for a lot of the incumbents to match over the long term. So yeah, continue to be patient, continue to be cautiously optimistic. But let me hand it back to
Tanner. Thoughts on that answer?
I could barely hear a thing.
Really? You didn't hear anything?
No, I this is pretty quiet, but there's a comment that I read in chat that I loved, is that I'm learning to read lips. But I was even at the event and I don't remember what he said. But
so the point is, what he said was you need to be cautiously optimistic. And one of the things he said that he was interested to see is that the flywheel that Vlad was telling him what happened would be you get more people, they're going to put more assets into the platform. And Ravi, the head of credit, was like, I don't know if that's going to happen. And what he just said right there is like, that's starting to happen. And so he's getting excited because the flywheel that Vlad was talking about is starting to become real because of that product focus. And they're attracting a lot of low risk customers, people that just aren't going to default as easily. So do you think that is enough of a reason to take this slow before they speed up?
Yeah, I mean, they have to take this slow. They got this background from Capital One and New Bank. And so they're just following that. Not exactly the same. I've noticed some differences at Robinhood. They'll start people off with a higher credit limit than like not even adjusted to, GDP per capita or something like this, but just like generally at New Bank, they start really small and work their way up. And at Robinhood, I've seen people get their first card and they'll have 25,000 or something like this. And it's like, this is not what, New Bank would ever do. But it's probably also based on a higher assets at the brokerage already, which New Bank would never have had. They were a credit card only company for a while. Robinhood kind of gets to see a better picture of the user because the first product was brokerage.
Yeah. Roy, your thoughts on this credit card answer?
I mean, yeah, it's a good answer. I like the cautious optimism. I liked, that he admitted Vlad was probably right. Time will tell. But yeah, score one for him. I mean, like, it just, as an investor, that's what you want to hear. You don't want to hear like, oh, hey, we have 2 million on the wait list. We're going to try to get cards to everybody this next year. I didn't hear that. Like, they are accelerating, but they feel like that they can do that at this point. Yeah, if all 2 million are given cards this year, that would be a little bit scary, but not as scary as if, within like the first 6 months of the launch, they're like, here, cards for everybody.
Yeah, no, they'll have to take it slow, but it's perfectly fine. I'm not actually worried. Like, I think the credit card is just this cherry on top that will become a giant, but even if it takes a while, it's still, not something that I think many people were even expecting from Robinhood, and their annualized spend already is larger than SoFi's credit card. So like, that just goes to show you.
Yeah. And again, this is another way of diversifying the business. In 2 to 3 years, if they can get probably 4 to 5 million people at that point on that credit card, that is going to be a money printer for them. And if they get the underwriting correct, it's also going to be very exciting. Let's answer this question before we go on to December metrics. Sunny Raj says, what happens if a billionaire starts a new brokerage with everything Hood offers with a much more fancier platform?
There's been hundreds of brokerages that have been started after Robinhood. There have been brokerages that have started before them. And somehow, even though Robinhood is perfectly out in the open, no one is seemingly able to copy them. So I agree with you, but around the time of 2020 was really whenever there was a possibility of them being disrupted. Whenever, retail brokerages, mobile first brokerages were super hot, and every single company was going after this, and still Robinhood was on top. So I don't like this thing whenever people say, oh, there is this billionaire that's doing this, so that means that this no longer exists. Let me just go to X Payments really quick. There have been so many payment companies that have tried to go after PayPal before X. It doesn't mean that once one is created, this just means every company that's happened before them immediately turns to dust. you know? So I think it's not even worth, I gave too much to this question already.
Yeah. And the billionaire in question probably is Stephen Cohen, not Elon Musk, by the way, guys. Yeah, no, that's absolutely right. Is you can think of it this way as far as like EVs. The whole thing with Tesla back in 2019, 2020, 2021, the competition is coming. Rivian probably will survive. It's going to actually turn a net profit for the first time ever this next quarter, but you know, it's a
Wait, Rivian's going to be profitable next quarter? You sure?
For 1 quarter. Yeah, that's it. Separate discussion, but it's a 1 quarter thing. Then it'll take them a while. They basically stockpiled credits. So, you know, like Lucid, I mean, it's on life support. A whole lot of others have gone out of business. Chinese manufacturers, which are subsidized, are doing okay. But like, there is no EV competition with Tesla. Like, they are taking that whole market. They're disrupting legacy auto. And so it's the same thing with Robinhood. Is that the other weak point might have been 2021 in January or February, with retail being very frustrated, you know, over GameStop and all that stuff. But I mean, some people left Hood, but it's still a growing, thriving enterprise. And I mean, they continue to innovate. It's not like Robinhood is just sitting still and saying, okay, we've got a nice lead. Let's just stay right where we're at and not do anything. If they did that, yeah, competition will catch up to them eventually over time. But it's surprising how slow competition is in that. You need to be able to compete with Robinhood. You need the vision. You need really good engineers. You need to actually pull it off. You need credibility. You need a lot of things, and you need a lot of time and a lot of money. It's not just a thing you can throw only money at and hope that it'll work.
How's Threads doing?
Well, you know, Threads actually does have 300 million monthly actives. So
whatever, bro. I don't believe
it's half of Twitter. I'm just saying,
dude. Some of those metrics that Meta throws out, I'm like, get at it. We have 600 million people using Meta AI. No one uses that shit. They opened it because you put it at the top of the messenger, and that's it. And then they click on it and they go, oh, that was inactive. They used it. No one uses it. I don't believe it.
No, that's fair. That's fair.
The better comparison is Blue Origin. Basically, this is like competitors are launching Blue Origin. Like, oh yeah, we got lots of money and we got similar vision and engineers and quality. Is like, no. There's SpaceX. There's Rocket Lab too. Blue Origin is nothing.
Yeah, and look, the question assumes that another company can replicate the user loyalty Robinhood has created and the engineering that Robinhood has, which Vlad has openly said he pays a lot for engineers because he just wants 10x the quality. And that's just not happening. Like, Robinhood's competition is not any of these dumb little startups that think they can compete with Hood because they give you a rebate on your options or something, right? Like those guys aren't competition. It's laughable. They're not competing with Robinhood. Robinhood's competition is Schwab and Fidelity. That's their competition. And that's, you know, really not competition because Schwab and Fidelity are so much bigger that no one really thinks Robinhood has even a chance of taking over their trillions of assets until Robinhood gets to the point where, I mean, look, they're 20% of the way, right? They're at 200 billion in assets. Trillion is coming up hopefully in the next 5 years, but that's their real competition. And Schwab and Fidelity are not going to out innovate them. So really it's their market to capture. They just have to keep innovating and executing the way they do.
It is funny, eh? Like did
you just say A?
Well, yeah, I'm from Canada.
I just heard some maple syrup in that A. That was,
yeah. The funny thing is that like the monster that's scarier is the one that we haven't seen yet than the ones that already exist, sort of thing. Like this brokerage that doesn't exist, everyone's like, well, it could be a big deal. And no one seems to worry about the Weebles, the Moomoos, the Sofi Invest, the Public.com, the M1 Finances. They are all competition that exists with tons of users, yet the total addressable market is so big that no one even brings them up. And everyone's worried about the companies that don't even have a member yet.
Yeah.
Like, I don't know. I think that there's a lot to go around and there's so much to take from the incumbents that, like, yeah, I don't know. And also, another thing, I heard this whenever Meta was like down at like $80 and someone said, you know, like Zuckerberg's in his like 30s. Are you really going to bet against this dude for the next 30 years of development? And I find the same thing with Vlad. It's like, okay, this is what he's thought of, and he's still super young. You want to bet against this dude's success like over the next 20 years of building financial products? I wouldn't do that.
Yeah. I think it's going to be hard to compete with Hood. I think it's going to take a lot of innovation, and I don't think a lot of companies have it. And you know, that's the fun part about investing in them. Like, we see what they're doing, we see their vision, we see their trajectory, and as long as they keep executing, it looks like this is their market to just take over. But they've just got to keep working. Can we do December analysis and metrics? Let's get into that.
Hold on.
Okay.
Before we do, can I do the last credit card thing?
Yeah.
So this was, they mentioned in the rewards tab of the credit card thing, they have a whole long document on it. And they mentioned like potential using rewards for like upgrading to metal cards, whether that's the solid gold or not. Don't know yet. And then mystery box. And I actually love this. So you can use your points to try to win a prize through the mystery box. We don't know how many points it is. You always win something. 10,000 points, 5,000, 2,500, or discounts. Or this one's interesting, 5% cash back for 24 hours. There is a limit. You can't do like $5 million of transactions and get that. But yeah, just it's, I thought it was in keeping with Robinhood's theme. And I don't mind that at all. I probably would not use that at all. I like just putting it right in the brokerage. But what do you guys think of that?
This is cool. I haven't seen anything on this.
I think this is just in their nature of like these kind of gamified ways to get you to keep spending, to get points back. I think it makes sense. I think there's a lot of ways they can navigate rewards over the next couple of years as they build out the credit card product, because 3% is nice, but if there's other people that want other things and you incentivize them, then there's other ways they can get people to sign up for it. I think there's gonna be a lot of experimentation, as Hood usually does on this product as well.
And the thing that's really interesting about those last four, those are specific companies. Usually when you're doing things like this, you have a deal with the company as well. So it's not that you're paying the percent back, the 5% completely. It's they're paying a certain amount as well, because they know this is going to drive revenue their way as well. So you know, it's just interesting. This is a hypothetical probably example. Maybe they have these already lined up. Who knows? But it's pretty fun.
Someone said gambling your cash back, that's effed up. Why is that bad? You'd rather just go and gamble straight dollars than the small amounts of cash back? Like, I don't know. I think it's, who cares?
Yeah, I mean, I think it's just them having fun with this stuff, right?
Yeah.
And finding ways to get people. That's the thing. Attention is the greatest asset in our society. You got to keep people engaged. Robinhood is becoming really good at doing that.
If they can find a couple of users that enjoy using that credit card for the game that comes after that, you know, take it. That's fun.
It's the gamification of the credit card industry right there. So
Yeah.
not really, but no, it's like I like it. You know, no one's forcing you to do that. Just giving you more options to, you know, the only thing, by the way, before we pivot to December that I did not like. Have you opened the travel portal at all, Amit?
Yeah, it is a web view, which is kind of stupid and looks really bad. So
Say
they got
that again.
If you open up the web view of the card app, or if you open up the travel section, like if you want to book a flight tomorrow, I mean, I'll show you guys right now. It is just, it kind of sucks. So
It does.
if I press travel, it opens up.
Just careful. Let it load on its own.
No, it doesn't show anything like that.
Okay.
But if I click travel, you see how it's like a in-app experience to like book a flight. It's really, I know it doesn't look too crazy here, but it's not a good experience inside of the app itself. And it's kind of like rigid.
It's likely a white label of, I don't know if it's Expedia or what, but yeah, it's what I thought was really interesting with that. I only use it for a little bit, and when I think data-driven investing mentioned, maybe it was somebody else, and I went back in and I'm like, yeah, it just feels so different than the app. Everything else feels like Robinhood. It's just
exactly.
seamless, no latency. And then you saw it right there. You click on travel, it takes, you know, a little bit to load. And then it just looks like every other website. That's kind of the thing that Hood spoils us on, is it's a phenomenal user experience all the way around, except when they white label things. And this is a minor thing, so maybe travel will continue to be white labeled. Maybe they'll build that in house. I don't know. It's fine. I don't plan to use that much, but the only thing that I didn't like out of the whole experience.
Someone in the chat, I'm sorry, I'm going super off base here, but someone said you need your own travel agent if you travel a lot. Is that true? Because I wonder why these people still exist.
I don't think I've ever used a travel agent in my life.
But
they
would
can
they
be
offer
useful.
something to frequent flyers? Like, is there an actual benefit?
If you're traveling overseas and you don't know how like customs works, or like what's a best place to exchange, or a safe place to be, or that sort of thing, that they can be useful. But I mean, otherwise, if you're a normal traveler, no issue.
Yeah, I don't use them either, but I'm also not like, maybe I don't. Maybe there's some ignorance here of why, like, maybe they still do exist. Anyway, let's jump into
December
numbers. So what I'm currently looking at, we can look at equities and stuff like this, but what I think is more interesting, like I said, my full focus is crypto right now and how that market is doing. What you'll see here is the last 3 months of the total crypto market cap. Okay, so it's looking at all the coins, and as you can see, we're at about a $3.9 billion trillion crypto market cap. And in October, starting here, what I'm looking at is the bottom number, or the volume. Let me see if I can make that any bigger. And the volume for October was, 60s, 100 billion a day, right? And then once we started getting into the November numbers, it started to go 100, 200, 100, 300, 400 billions.
This is the amount of crypto that's traded across the industry, correct?
Across the industry.
Huh.
And then once we got into December, these numbers not only held up, but also started to hit new highs. So December, 200s, 400s, 400, 400, 500 billion, 360, 200, 200, 430. And so you can kind of keep an eye on this to see if this is going to stay high. We don't like whenever they start getting into the hundreds, but still we have not anywhere near October, which was the time whenever we got 5 billion in crypto volume traded for Robinhood. What we do want is these 100 plus and potentially even 400 pluses if possible. So hopefully this continues the way it is. So far it's looking, not only is the overall market even higher, so assets under custody, average trade totals will be higher for Robinhood. We don't know the percentage of the market cap that they have here, if that's expanding, but what we do know is that overall trading is higher. It's, in my view, this is very consistent whenever you're looking at how they're doing on a month-to-month basis.
I've never seen this before. This is very helpful for me. I didn't know you could track the total amount of crypto traded a day, because if the volume was like 319 billion a couple of days ago, and Robinhood only did 30 billion in November, there's a lot of room for them to capture some of this. They're not going to capture all of it, but if they even capture like 0.1%, they're going to put up 50 billion in.
Yeah, just assume trading. They hold the exact same amount of market share. Then if the days are doubling, then you would assume that their day has doubled. But if they continue to grow 400,000 new users a month, their market share will probably climb even higher.
It's actually really interesting. At the beginning of the year, well, even before then, like we could go further back, there's a lot of excitement and interest on Bitcoin miners. And I have some that I will back and forth because they're terrible businesses and I don't want to own them long term. Most of those are up like 15% year to date. Robinhood's up a little bit more than that. And it was also seen as a crypto proxy. The only one that's really done better is MicroStrategy rather. But yeah, Robinhood, like, such a strong business model. But yeah, right now it's all about crypto. On this crypto, like, this is December, as far as numbers, yeah, it looks like December is going to be really good. We'll see what the rest of the month does. When do you guys think that we hit crypto winter? Because I think that might happen before we see a bear market.
Honestly, I don't know. I'm not I've been holding crypto for a little bit, like a few years now, but I'm not a crypto expert or something like this where I try to time the markets here.
I have no idea, bro. I mean, most people are saying, well, Tom Lee's argument is Bitcoin will go to 60, then it'll go to 250. Bernstein says it's going to 200. A couple of the firms came out, said 180 to 200 is their target. I mean, a lot of the bulls think we got till the end of 2025 for this thing to really max out, which is another great year for Hood.
But triple digits Hood if that happens. Like,
yeah, but like if it declines, is the bottom 150K after going up to 200 or 90K after going to 200? I guess none of us know. But I think in the next year, if they can diversify the business outside of just crypto and like use Bitstamp to capitalize to make sure that trading volumes are not the only way they make money off crypto, that's what's going to be really important.
Which is happening. Like we have so many things to cover in here, but like, what is it? The global dollar coin? Roy, help me out.
Global dollar coin.
The Paxos Robinhood stablecoin.
Oh yeah. I can never
Global
remember
Dollar
that.
Network. That's what it is. Global Dollar Network is the Robinhood stablecoin that they just got in bed with Kraken, Paxos, all of those ones, and they will have a large revenue share for the coins that they actually have. So in the revenue lines that Coinbase ends up winning in, like stablecoin revenue, which is just explode. If you take out stablecoin revenue from Coinbase, Coinbase looks like a shit co. They have made.
Oh, hold on, is Robinhood getting zero money from stablecoins right now?
I mean,
Basically.
yeah, basically. But I don't know if zero is the right word. But yeah, it's not a line item for them right now.
It rounds to
it
zero.
so.
Oh, but Tanner, can you explain to me like I'm a third grader, what the hell is a stablecoin and how does a company make money on it?
Think of it like a dollar. I wouldn't think too much past, do you make money on cash sweep from Robinhood holding dollars? Well, potentially there's an opportunity to hold a dollar that moves 24/7 instant settlement that's based on the blockchain, but it's backed 1-to-1 with real dollars. So if you buy 100 global dollar network dollars, silly as that sounds, Paxos is going to go out and get $100. So you always have the equivalent amount of USD. You're not buying it as an investment. You're buying it as if you're buying US dollars.
And how would Robinhood make money off that?
The same way that you'd make money from them having cash on their balance sheet. They would make interest from it.
Yeah, the benefit, I mean, there's several benefits of stablecoins, so I don't think we'll go through all those, but you can save on margin as well because you can settle the transactions in stablecoin conceivably. And so you don't have to use somebody else's payment rails. And so if you're using that, with the debit card, with the credit card, that'll take time. Even PayPal's not doing that except for on one product, but it saves you a lot of money on the bottom line. And then usually, although Paxos might be the ones that are yielding from this, those assets that you're holding to cover that balance, you're getting like T-bill interest or something like that. But yeah, the bigger thing is the margin and just having your own coin that you don't that you can use, that you can control, that you trust. But yeah, like they have so much going on for them, not just for December, but next year for crypto, because we've seen them launch new tokens on Robinhood. Yep. I don't think that they're going to just be like, okay, we've added 5 more, we're good for the next 5 years.
Yeah,
that would be shocking.
Constantly monitoring it. They have a committee for it.
Yes. And with SEC, Gary Gensler being out, I think that's going to be very favorable. Of course, staking is another thing they mentioned in the investor day. I see a number of people, even somebody mentioned it in the chat too, very, very interested in that. I prefer to self custody and self stake, but that's not everybody. And it's very, very easy to do that. If you're already trading coins on Robinhood, you get some yield and it's kind of like cash sweeps. Robinhood will get a portion of that yield as well. And of course, the European offer. And, we'll see when they launch in Asia Pacific. I expect crypto will also be available there. I don't know for sure because of regulation. But yeah, like even if it's not the most crazy bull market next year for crypto, if it's doesn't hit winter yet, it's still going to be really good.
Yeah. So someone I think in the chat said for staking and stuff like this as well, like they're already doing this on the Robinhood wallet. So Solana, Ethereum, they're starting to make staking revenue, but this is so minimal right now, but it can be huge. Like I do not like Coinbase. I mean, I think that they'll be around forever. I think they have the best institutional products available. They will be huge. Okay. But for retail, Robinhood is really taking the game. And you can look to Coinbase and see what do they have to offer, and what are the different revenue lines that they've expanded into, and look as a total percentage of revenue, how much staking makes up for that, how much stable coins make up for that, all of these different line items that they have that make up sizable amounts of their total income, and see that like Robinhood's in none of these. Like there's so much to grow into in crypto, and like they said at the investor day, like what you're showing here. Well, I mean, not this exactly, but like they have their eyes on all of them. They're not ignoring them. Sorry, go ahead and speak to this.
No, yeah, I agree. I think that crypto winter definitely will happen eventually, but I think Robinhood should be much more diversified by then. I also think, this is the reason Robinhood doesn't get the crazy multiple that some of these other SaaS companies do, is because this 800 million is cyclical, right? Because what if Q1 sucks for cryptos? This 300, 400 million they're going to do this quarter, you can't replicate it. Whereas a SaaS company, CrowdStrike's going to do the same amount of revenue because, mostly their clients won't cancel their subscriptions. So Robinhood's going to have to figure out how to get the market to believe in their ability to keep growing, even in different market dynamics, which I think is going to be their biggest challenge, quite frankly, over the next 5 years. But that wealth transfer and that ability to transfer that wealth and then use it to offer products and new innovations. For example, tokenizing different asset classes, which Vlad talked about.
Real world assets, baby.
$85 trillion that comes in over the next, Robinhood's not going to get all of it, but they're going to get some of it. That money might not want to buy traditional assets. It might want to buy tokenized forms of real estate versus an actual house. And if Robinhood is the platform to do that, then this whole cyclicality thing goes away over the next 5 years, because there's just going to be so many people coming in, and they're going to have so much momentum and so many opportunities to upsell different products and different services, that you're just going to have an influx of users. I mean, Schwab still gets like a couple million people every quarter or something, just because you have new 401k signups, new broker. Like, you just have so many people that are inside the Schwab Fidelity ecosystem. Robinhood hasn't even touched like 1/100th of what that volume looks like. And that's why I think the market is excited about their growth prospects.
Yeah, I hope next week and the week after this, we continue to build on all the topics of the things that they're working on. Like Robinhood Gold as a subscription model is so exciting to talk about. If I could just give a little spoiler for next week. I mean, we don't have to touch on it next week. I'm sure there'll be big news then. But Coinbase is a really fun company to look at and see what are their memberships look like, and how do you compare that to Robinhood's. And so Coinbase has a product called Coinbase One, and they charge $30 a month. And they just put out Coinbase One Premium. It's $300 a month. Okay. For the people that take their crypto seriously, obviously Coinbase has products to offer them that Robinhood cannot offer now, but they're going to close that gap with Bitstamp, and I cannot wait. Super exciting for that.
And Coinbase just hit 600,000 members. Robinhood has 2.2 million gold.
600,000 members paying $30 a month just to lower their transactional fees, and yet Robinhood's already 1/4 the cost and charging $5 a month. Like, I don't know. Such a pricing advantage. I just think they're going to continue to eat the market.
And related to that, as they grow gold, and that's certainly a priority, I don't know that they'll raise the cost of it, just because they want these things to happen. 7 times assets under custody for gold subscribers, 2 times the net deposit growth rate, 5 times the retirement adoption rate. And of course, the claim rate is continuing to climb, even as the overall number too. So it's doing really good things for Robinhood.
So let's end out the show with this question. What's the most you'd pay for Robinhood Gold? Tanner probably is not sure because he hasn't used it, but I'm curious. What would people say? What was the most they'd pay?
The most amount. So I would have a formula for this just for anyone. And it's however much to pay to keep where the interest on your money sitting in those accounts is higher than what you would get at a separate account. And that could be by $1 more. But
yeah, I mean, I'm thinking of it qualitatively in terms of new features that they put out and me being on the cutting edge of like getting their new financial LLM or their AI agents or something. I think I'd pay $15 a month. That's the most I would pay. Above 15, it gets a little harder to justify, although because I'm a shareholder, I'd probably pay 20, right? But I think 10 is a good sweet spot. I've talked to Vlad. He wants to be very Amazon Prime-ish, Costco membership is on this thing and not raise it. But if they do raise it, it's probably going to be $6 or $7 max when they raise it. It's going to be very incremental. Like Spotify just spent 5 years and then they raised it a couple months ago, right? So it takes a long time. But if you get another $1 or $2 out of 5 million people, that's not bad every month.
Yeah, I would easily do 20, maybe 25. With the Roth and the IRA match, what they do on that, the 3% match with what I get back from the gold credit card, like just those two features is like, it's great. The free margin too, that's super helpful. I really like that $1,000 free margin that I don't have to pay for, and I use it to round out trades. Doing that right now.
Yeah, I mean, if Coinbase can charge $30 a month, I don't think that like it's all just about how much money you have under custody, right? Like, I don't think that the people that are bringing over millions of dollars are worried about the $5 a month or the $30 a month. They want high interest on their money that's sitting at those accounts, and all the additional features that come with it.
And as far as like Coffee Bowl saying, worrying about them raising it, I don't think that they will for a while. Eventually I think that they probably will. Don't know that for sure, but they really want to just grow the number of people that are using that product. And it will grow. It will grow a lot.
Dude, Wall Street loves when these companies raise their subscriptions. Like any company you look at when they announce a price raise, Wall Street, Netflix, Spotify, Wall Street's like, yep, we're buying more, because they know these products are sticky. People don't have the attention span or the energy to really cancel their subscription, especially if you're using it every day, like a Robinhood. So and if you're making money on Robinhood, theoretically as an investor, you should be able to dish out $20 to $30 a month for a product like this. And they're growing people with higher account balances that wouldn't give a shit about $30, right? Maybe in 2021, their cohort of customers would, barely pay a couple bucks a month, but things are different now. So I agree. I think they're going to grow heavy.
If you sign up for Costco and they start offering you more and more features, better cost on merchandise, everything like this, these are the expenses of having like, a membership that they can sort of change the gap versus on a per dollar basis of merchandise. But Robinhood, it doesn't work that way. Every product that they offer is a money-making product for them. There is no hot dog. Like someone said, oh, that's their Costco hot dog. They have no money losing products in their thing. Whether you're doing equities or options or you're using for cash sweep or whatever you want to choose, it's all money making. There is no Costco chicken.
Right. And the financial LLM, Pluto, that they're working on, I think that's going to be a big feature next year. I'm curious how they're going to implement that into gold. I imagine you have to be a gold subscriber and you'll get access to like these exclusive research tools. But I think they're trying to perfect it to make it really good. Maybe with robo advisory. Advisory, that's another industry we barely talked about. Like, there's just so many verticals that they're getting into, which makes this exciting.
No loss leader. That's what I meant to say. Really quick, Amit, I bought a new company.
You bought a new company. By the way, Bitcoin's at 107. So there you go. What company did you buy?
It's a company that I fought really hard on a bearish side that I've recently turned bullish on.
Hold on. Roy, you and me have to guess.
Roy knows.
Oh, Roy knows? Hold on. You were bearish on them?
I used to come on your channel from like a weekly basis to tell you how shit this company was.
Is it Robinhood?
I did that before.
We had some good debates on Hoodie. Robinhood's up a little bit after hours.
I bought Google.
Wow. All right. So let's end up the show talking about Google. Why the hell did you buy the dying search company called Google?
Mainly quantum computing. And
Tanner, you did not buy Google for fucking quantum computing.
Hold on.
You did not buy Google because you saw Sundar Pichai talk about quantum computing.
Well, it's not the sole reason. I bought the entire business, but I'm very excited about buying the next leap in technology. So it may not be here for 10 years, but I'm buying a company with outstanding margins, buybacks, dividends, growing amount of advertising dollars, fastest cloud growth out of the big three. I'm buying for all those reasons. But the thing that made me get really bullish was quantum computing. I think that's very exciting.
Roy, what is your thoughts about that?
I shifted from bearish to neutral. I'm not buying it. I have still have concerns on their culture and their leadership. I think their leadership is a little bit better than I gave him credit for back in January, but not great. And I think their culture is not good at all. But quantum computing is a nice piece. Of course, they benefit from all of AI. You know, Google Cloud's a good product. I don't see search probably being disrupted. The Pixel is a fantastic phone, and Google actually integrates Gemini in their phone system, and possibly for others as well, better than anyone else out there. So I think that they might actually be the first that takes this commodity of an LLM and really sees a lot of revenue from it in the future, both from their own products and what they're able to merchandise it out. So I if it wasn't for the cultural issue, I would probably grab a piece. I would have already probably grabbed a piece at the moment that quantum computing news was announced, but I have concerns with it. I would rather own Amazon if I was going to pick a new Mag 7 that I don't own right now. Maybe Nvidia, Google. There's more attractive to it than I gave it credit for. So
someone said 190 is a bit pricey for Google. Well, look at their forward earnings, and then you tell me if they're pricey.
That's what I was gonna say. I was gonna say I like this buy not because of quantum computing. I like it because Google's cheap. Google's cheap.
I think that you sorry, I think you got me off or I answered your question wrong. It's definitely not the sole reason why I'm buying Google. I think that the changing part is that this is Optimus for me. This is Google's moonshot idea. Okay. And I do think that it'll come to fruition. And I do think that the way that Meta shifted from a software company and could be the potential large player in hardware technology of glasses or VR headsets is what Google is trying to do as well. They're going from a software layer and could potentially be a very serious hardware player in quantum computing for a very long shot moonshot idea. But my main thing is obviously valuation. Like that is every stock.
I agree, dude. It's cheap. It's ChatGPT is not taking any lunch from them. They're buying back their shares. At once the DOJ fears are gone as Trump gets elected. I think the quantum computing thing definitely is an accelerant to prove to the market Google is innovating. That's like a perception thing, even if there's no use case for it. And I agree. At 190, it's the cheapest Mac 7.
DeepMind, Gemini 2.0 coming in here. And also my bear case got destroyed. So the biggest bear case that I had was that their cost per search was going to skyrocket due to AI. AI was like at the time, whenever we were talking about ChatGPT 3, like ChatGPT queries were like 9 cents per search. And they were doing no image generation, no video, nothing like this. And Google in their latest earnings call said, hey, over the last 18 months, we've doubled the size of our models and the cost per query dropped by over 90%.
Yeah.
So you cut your query cost by 95% essentially, like 1/20th the cost. So I'm like, okay, well then my case is dead. Like I've got nothing to like, that was my issue. And now that's gone. And then things like circle to search and stuff like this are revolutionizing the way that people search. And so, yeah, I'm stoked on Google right now.
It is circle to search really? Because I have that and it's okay, but
yeah, but they're saying the usage is insane.
Yeah, that's what they're saying. I'm not seeing anyone else say that.
Yeah, well, fair.
I mean, they also have Waymo that's doing 150,000 pay. I mean, good.
Yeah, that blew me away. I found out that San Francisco, there's more people using Waymo than Lyft. I would have put so much money against that. I had no clue.
Yeah, I think that Google's doing really well. Just that cultural element, I don't like that. That is the bear case, honestly. It's not the government breaking them up. I think that ship is sailed. But yeah, leadership and culture are big to me, and Google just doesn't have it.
Yeah. And now, and I agree with you, culture's absolutely terrible. But I mean, I'm not putting all my chips in. I think I'm going to take a position in Amazon this week as well. And I'm going to kind of go big tech into Trump's thing.
Well, what are your let's end it off on this. What are your guys' top 3 DCAs in 2025? Either new positions or DCAing into current stock. What are your top 3 ones that you want to DCA into? In the chat as well, you guys can answer this.
PayPal is for sure up there. Hims, I would like to get some more of that as well. I don't know that I have a number 3. There's a lot of ones that could fit number 3, but I would just say those are my top 2. Enphase isn't quite up there on the same regard, but yeah, Hims and PayPal I'm putting a lot of money into.
Probably for 2025, for me, it literally is going to be Google, Amazon, and Nvidia, which is crazy.
That's not crazy. These companies are the best companies in the world, right?
Amazon might be number 3 for me. I've talked for years about starting a position there, and I think it's even though it's an all-time high, like it's a quality company, great company that's positioned very, very well, led well, better culture, has a lot of things going for it. It seems like an easy play.
Lena Gone, you know who I'm talking about?
Lena Khan.
Bye-bye. Lena Gone is that is going to make big tech skyrocket, I think, just that alone.
Yeah, I think buying the Qs, even though the NASDAQ is at all-time highs, I mean, I don't see how tech slows down next year, unless we have a recession, which could happen. But if we avoid that, like, I don't know if people are going to go to small caps when they could go to Google or Meta, you know?
Yeah,
So
there's a few small caps I'm interested in, but not at the same level as those I mentioned. What about your 3, Emmett?
Grab's up there, Shopify's up there. Tanner, I need to get some DD from you on that one.
Cool.
And the other one is a mix between Tesla and Amazon. Oh, and Rocket Lab. Definitely Rocket Lab. I want to do that one as well. So, yeah, I mean, definitely some new names I'm looking at in 2025. But the most important thing is I don't know if I'm going to be around in 2025.
What?
Because apparently,
oh, okay.
apparently the aliens are coming to get me. Okay. So this guy just said, get out of New Jersey. The drones are sniffing for something and it might be missing a nuke. Also, radiation is elevated.
Yeah.
So are you guys keeping up with the story? Like, are you afraid of the aliens?
No.
I read this, but I'm in Canada, so good luck with what you guys going on over there.
Yeah, it disturbs me that the government has no real answer, or they're not giving an answer. It seems like it's probably one of ours. You know, it's something that's going on. Maybe test. I don't know. Maybe even it's a company, but it's a little weird. I didn't know about this heading over to New Jersey, and now I'm like, hey, Amit, we got a room for you if you need to flee as the aliens invade.
Dude, you were just here a week ago. The aliens waited for you to leave, and now they're. Dude, last night the lights shut off. There was police sirens for 10 minutes. It was foggy outside. My heart was beating a little bit, bro. Because like, what if there's a real alien invasion? You know, it was a little scary. But hopefully it's not.
It's the whole uncertainty thing, right? Markets don't love uncertainty. It's because people don't love uncertainty, and having things like that where there's no clear answer from authorities at all that's convincing, it's a little unsettling. So I get where you're coming from. Texas feels very far from New Jersey, so I appreciate that, but it's weird.
Mickey says shit's been kind of boring. Dude, this year has not been boring. Like, there's been a lot of shit. I don't know if your 2024 has been boring, but it's been a lot of shit going on in 2024.
Dude, Trump posted a picture of this large dude eating McDonald's while drones were serving him more.
That is the former governor of New Jersey. That's the large guy he posted.
Oh, is that Chris Christie?
That's Chris Christie, correct.
Oh, I didn't even put that two together. It does look like him, though.
No love lost between the two.
That's too funny. I just thought it was this large dude. But the second you said it, I was like, oh, that's hilarious.
And Trump loves McDonald's, so he probably doesn't mean this fully as an insult because at least he's giving him food that he likes. So,
but SoFi, guys, keep
an
eye on this one.
You want to end the conversation on SoFi? So SoFi is $17,
don't we?
Yeah.
What'd you say?
Well, we've done like 6 last conversations.
Dude, you guys need to understand, on my stream, on the market close every day, I said, all right, guys, that's it. I do my clap, and then 30 minutes goes by. And then, all right, guys, that's it. And another 30 minutes goes by, and it is what it is. You know, that's just what we do.
It's fun with guys.
The executive vice president of the lending department for SoFi just tripled his position and bought $500,000 of SoFi stock, which doesn't sound like a ton, but this dude is not a billionaire, you know? He's a regular executive vice president of this segment of the company and tripled his position. On top of that, Anthony Noto today, quote unquote, sold. Bring up the one in blue text. Or sorry, you can bring up that one first and then bring up the one in blue text. Yeah.
How do you say his name? Eric Schopenhauer?
Yeah,
Sure.
Schopenhauer. Something like that.
So he bought 30,000 shares, basically.
Yeah. $500,000.
On the market. It's not an option or not a RSU. 1634. He just straight up bought shares.
Open market purchase. And then Anthony Noto ended up selling, quote unquote, selling 2 million shares of SoFi, or more importantly, $33.7 million of stock. Now, if you go to that blue text one, which should be just right under it in the replies, open this up for a sec. This is not just a share sale. In fact, he's doing a loan. So he's using his 2 million shares as collateral and getting a prepaid forward sale contract between Anthony Noto and Goldman Sachs. He's going to receive $33.7 million up front. And at the time, we don't know the terms of the deal, but it'll probably be years away. He'll have to he'll have to return $33.7 million worth of stock in shares. So today it's worth 2 million shares, but he doesn't want to pay 2 million shares. He probably wants to pay a lot less than that. So hopefully this is like a call option on him, on this company running up. So he might only have to pay 1 million shares.
So hold on, I'm confused. If the stock runs up, why does he pay a?
Because he only has to pay the market value, which is the 33.7, not 2 million shares.
Oh,
so they're using 2 million shares as collateral, saying, hey, like, you know, worst comes to worst, we're taking this. But really what they need is their principal back and some interest.
So if SoFi goes to 25, instead of paying 50 million, he would pay 33 million.
No. If it goes to, well, let's do it for easy math. So right now the contract sold at 16.88. If it goes to $33, instead of him paying 2 million shares, he's only going to pay 1 million shares to return that 33.7.
Gotcha.
Okay. But if the stock goes to 8, he's got to pay 4 million shares. So he's making a huge bet. Like if he wanted to sell shares, he could have just done that in the open market. Okay. That's not what's happening here. He's betting on the future stock price going up. And now conspiracy theory is starting to come out. Okay. Is he doing a micro strategy right now where he's selling future shares and buying back SoFi stock with his own money?
That would be amazing, honestly.
So they think that he's doing convertible notes with his own money to rebuy SoFi stock. He's doing exactly what all these companies are doing with his own money. And you know how we know it's bullish? It's because the executive vice presidents are following him into this trade with $500,000 in the exact same day.
That's actually really bullish. And it wouldn't shock me. Like he could be using this for personal means or whatever, but it wouldn't be crazy to see a Noto buy before the end of the year.
And you know what? This also coincides with, one, he said this is the best macro they've ever seen. But also, he has performance-based stock units for $25, $35, and $45 in the midpoint of 2026. I bet you this deal goes past that time length, and he'll probably end up making so much money from that he just returns the money in cash and just says, hey, give me this 2 million shares back because, you know what? They're probably going to be worth a lot more than, you know, whatever. So, like,
I mean, that's exciting. I haven't seen a CEO. I haven't seen a CEO outside of Saylor do something like this. I mean,
this is not. But if you know, this is not his first. He gets restricted based stock units, and then he also buys in open markets like constantly. He's always betting on SoFi. Yeah. It's just crazy that it's at the high of the market that he's saying, hey, like at $17, he's saying, hey, if this goes down, I'm going to have to pay twice as much. Like, how bullish is that?
That's amazing, actually. Yeah.
I mean, let's take this sucker to 25, bro. Let's do it. Like,
you know,
dude, that's my base target, assuming like there's nothing new that's bullish at all over this next year and the market's just okay. I think they could do a lot better. I think he's getting, well, this isn't SoFi Weekly. I think he's getting at least 35s for the PSUs in 2026 midway. It'd be great if he gets 45s. I love it when, and we have this with Robinhood. We have this with SoFi as well. When shareholder interest is fully aligned with the C-suite. Stock-based compensation is one of the things that does that. PSUs is one of the things that does that as well. It's great.
Yeah, some people are saying that these are creative loans and that this signs for a bubble. What this also could be, if you want me to just be more conservative, he could be doing this so then he doesn't have to pay tax on the loan and he's just lowering his tax obligations. So this could be
which is what a banker would do, to be honest.
Exactly. This is a Goldman Sachs ex-banker with Goldman Sachs. This could be as simple as him just doing billionaire moves. Okay.
But how insane and bullish would it be? This man that usually is risk adverse and cautious and prudent, if some of that is actually used to buy SoFi shares.
Dude, he should have done this deal on Robinhood like a true degen, bro. He should have like entered it in as a call option on Hood. I mean,
but you know what's so funny is people who are smarter than me were looking at this transaction and they were like, you don't need to do a Form 144 for this. So the only reason why they did is just to show the market that they did do it.
So if SoFi dips on this, that's the market not understanding what he's doing, which is
they're not. It's up. It's up. Look at it.
I know it's up right now. Yeah.
Well,
look, SoFi just got the market cap needed to be in the S&P 500. So if it holds 1680 to 17,
you said this was a $9 stock end of year. Okay.
Well, that's when it was 7, and I said, the reason my price target for Robinhood was $18 end of year when it was 14. Why? Because I don't want to be the guy on YouTube saying this thing's going to 50 and then everyone's looking at you like you're stupid. So my price target for Palantir was 35.
I agree.
My goal is to not overhype because then you get caught doing that. But when the story changes, and by the way, that was before Trump got elected. Once Trump got elected, everything changed.
Fair. Fairs. But last time I was on your channel, it was at $11, and I said, well, I probably see it at $15 end of year, and that was in October or something like this. I remember Kelly, sorry to call Kelly up, but Kelly was like, come on, Tanner, that's $4 away. Now I look like the most conservative guy ever. Like if it closes at 15, people are going to be pissed. But it's crazy how fast stocks can move whenever sentiment changes. And that's what I always kept trying to push for SoFi. It's like right now it's getting treated like a bank. Wait till sentiment changes. It'll get revalued like this. And it happened to Robinhood. It'll happen to SoFi.
But Amit changes price targets just like a good analyst. It's just based on price action. That's all that matters.
Yeah.
That's like
even for Hood, like what's my price? If I say 50 and we end the year at 47, it's like it's hard to figure out a price target, but I have an idea in mind on if it's cheap or if it's undervalued. And look, with Trump being elected, Noto saying he wanted Trump to get elected, and financials being in a tailwind, it's hard to see SoFi not outperform next year.
Here's the real answer. Don't stop giving them. Tell people.
Yeah, but then it's not fun.
Why are we doing price targets? Like, this is why I like to buy companies that I think will move faster than markets. That's the end goal. I
think you need to have some analysis for an audience if they're watching you on where you think the stock is going. Yeah. Right? You're like, it's going up. Like, okay. Like,
I think it's more fun that way, but the truth is I don't know. And I'm just here to tell you guys the news. And like, these are the things I like, but I don't even know what this is going to translate to. I just know it's hopefully going to be better than the average.
Yeah. And the reason why I like to give
that's why you're better than me at this stuff.
The reason why I like to give them out is I've been pretty accurate, but I'm very selective in what I give out. It's either base price targets. The ones I've not been accurate on was SoFi, and that's because the thesis was delayed because of no rate cuts for 6 months. Otherwise, this rally, maybe not at this point, but it would have happened earlier. But yeah, like things that I'm not confident on. Like right now, I don't have a good idea. Like I have a guess, but I do not have a good idea at all where Robinhood is going this next year, other than just probably up. Like how much? I don't think triple digits, but I mean, we're in a crazy market too. So
so that's what I said. I said Robinhood's triple digits in the next 5 years, which I think is reasonable. But I don't want to say triple digits 2025 end of September, because it's like you're probably not going to nail that, right?
Yeah.
Okay, I think that's it. There's got one last question for Tanner. I don't know if you have a response to this. Are you worried about the potential tariffs and it has swayed you from investing in the TSX until we have more clarity?
I mean, there's only one company that I really buy on the TSX, and that's Shopify. Aside from that, nearly all my money's in American dollars. I make American dollars. I invest in American dollars. You're
an American.
I'm an American, baby.
You're an American, bro.
Yeah, but
you like hamburgers and
Chris,
guns.
I did buy Google. Welcome. I did. I'm with you. I've been anti-Google. Now I'm here, baby. And I hope that you guys can welcome me.
Chris, you bought Google today, Tanner?
Yes.
So like what, 195?
Something, yeah.
Did you buy options?
No, just shares. I'm not that cool, man. I'm sorry.
We're trying to get Tanner to at least sell options next year, even if he's not buying them. So
he needs to get into like level 3 options and just spreads. Yeah, I did some spreads on Google. Like what?
Can you imagine? He's the guys, I bought some 220, 450 spreads on Google. It's like, Tanner, that's aggressive.
For real, if that happens, it is Invasion of the Body Snatchers, and you know the aliens have arrived and have taken over our friend Tanner.
Yeah, sugar water. I'm just doing it. Man, don't even laugh. You don't even know that reference, dude. You watch no movies.
I was hoping I could like naturally smile and just like we could end the show. And then as soon as I saw you open your mouth, I'm like, he's gonna call me out on this. I shouldn't even be smiling. What the fuck is sugar water, bro? What are you talking about? Like
Men in
You
Black.
gotta see the movie.
Yeah, Men in Black.
Oh, Will Smith movie. Okay.
Yeah. Sorry.
Another one that I haven't
That's the original, yeah.
watched. I gotta watch some movies, bro. I'm tired of missing all these cultural references, bro. It's not fun. It's not fun at all. It's not fun. I didn't watch Alien. People were clowning me on that. Have you watched Terminator?
No, I actually haven't.
Okay, good. Thank you. I didn't watch Terminator either. So that's
Yeah, the original's okay. The second one is phenomenal. It's the best one.
Get him in Edgar suit. See, I don't even know what that is, but
All right. We wrapping?
we wrapping. That's it. Thank you, everybody. Appreciate it. Tanner's and Roy's YouTube and Twitter is in the description. I'm going to put it in the chat right now. And
You
yeah,
just
we'll
type
be
in future
back.
investing, you'll find it.
Yeah, future investment. Amit, did you watch Blade Runner? No, I have not watched Blade Runner. I don't even know. I've heard of that movie, but I haven't watched it. Yeah, that's pretty much it. We will see you guys next Monday on episode number 3 of Robinhood Weekly. Roy, you won't be here, right?
Correct.
Okay, so I'm probably going to hit up either Arnie or Alejandro or someone else to hop on the show. And we'll keep covering Hood, episode number 3, into this podcast. All right. Thank you, everybody. Have a good night. We'll see you guys when the market opens tomorrow, and we'll see you guys next week. Bye, everyone.
Thanks, guys.
Later.